Welcome to another trade recap. Today's trade recap is for October 22nd, Tuesday, and we're going to be going over my S&P 500 trade. So today, I took a trade finally on the S&P 500, and what do you know? I took an L. Reasons why we stay on the Nasdaq. So, um, overall, let me just start off by saying if you stayed out of the market today, perfect, great for you because honestly, that's what I should have done. But I'm gonna go over my confluences, why I chose the S&P 500 over the Nasdaq, etc. So starting off, right, my confluences for the day on the Nasdaq, we had these 4-hour lows and 4-hour highs, along with these 1-hour highs, and then this 1-hour imbalance right here. If I widen it, stretch this out a bit, you can see that there was a 1-hour imbalance right here, which ended up getting filled pre-market. And then we also had this one right here. However, this was already mitigated, so pre-market, so I don't really count that. Yeah, so we had that, and along with that, we also had that's pretty much it. These 1 hour, these 15-minute highs, 1 hour highs, you can call them as well, because we did come down. So the 1 hour highs right here. So um, that's pretty much it on Nasdaq. Now onto the S&P 500. Starting off from the 4 hour, we had these 4 hour highs, 4 hour highs right here, along with these 4 hour lows. And that's pretty much it for the 4 hour. 1 hour, we just had these 1 hour highs because 1 hour wise, everything was already swept pre-market. So further down, let's go down to the 5 minute. Starting off, I was on the Nasdaq. I was looking at the Nasdaq. See how we had taken these 1 hour highs, right? Kept to get into the imbalance. And I was just watching price. We got this 5 minute downwards candle, and we started seeing some pressure to the upside around 10:30. Scale down. 10:30 was around here. This big up candle right here. Then we start seeing, but there was like no entry within here. Like, yeah, we have inverse fair value gap right here. It gets mitigated. Um, this is in an order block because this is gonna be your order block. This is the last candle that swept liquidity, right? So, like, I am not waiting for trade to be taken after this because there's no point, right? Because again, I was looking at price. We had an imbalance right here, right? So it just adds the confluences on the reversal, right? So we got liquidity swept on buy side. So now we're looking for ways price can come down and where it would want to target. We had the imbalances because as we know, imbalances is what attract price. Because price wants to fix these imbalances, right? Fill them in. So comes back, mitigates that. But overall, this is what I was aiming for. But again, I didn't find no draw on liquidity, right? We did have a break structure in the 1 minute around here. Till later. Sorry, excuse me. Like right here. But it quickly went up, right back up. At this point, I was looking at this price action. I was like, "There's no way you can find any entry on this." So, um, I went to the S&P 500 again, same time around 10:30, right? Well, a little earlier. Yeah, so it was a little earlier. I entered it pretty early, but regardless, I was looking at the S&P 500, right? We got this downward candle a little sooner on S&P 500. Around 10:15. So I was like, maybe we're gonna have another type of like yesterday's trade where we didn't have a 5 minute retrace. Um, Again, we had liquidity swept. This was your order block, so there was not gonna be an order block entry because again, we were going off one of these candles right here that weren't sweeping liquidity. So we were going off imbalances, and we're also going off of what I got from these range highs to these range lows, equilibrium. So we were within a discount, right? Price was within a discount. And again, we came up here and I was like, okay, boom. we're going back down. I saw the rejections. I entered. And you can see we were within profit for a bit, but my first take profit wasn't until these lows right here, 1 minute lows, and then these final 1 minute lows down here. Why was I aiming for such a random spot within the lows and not all the way down here? Because one, these were the most obvious lows liquidity might want to come for, or price would want to come for, liquidity wise, and because the 15-minute imbalance within the Nasdaq wasn't too far down, right? So that's essentially what my trade was going based off of. So, uh, but I should know once 1050 hit the macro time, the second macro came and swept right back up. So, stopped me right out. So we're kind of still green for the week, but just 1R so far. So, and luckily because of how price action was looking like, I didn't take trade on both of my accounts. Both of my funded accounts, I only took trade on one of my funded accounts. So still green on one of my accounts, but I'm still disappointed. Either way, no, it was a setup that I seen, took it, price I paid. Now let's go over what I could have done better. Essentially, the trade I would have wanted to take it would have been on Nasdaq. So because we had the imbalance, right? A range, a magnet for where price would want to go to. That's essentially why I was taking the Nasdaq. Um, but again, there was no entry like whatsoever around here. But again, it's not where I took my trade. We took my trade on the S&P 500. So let me go over this one. So things I could have done better. For starters, look for a draw on liquidity on the 15 or 5 minute where price would have been magneted to or would have been attracted to. I didn't see anything, but I still took the trade just because I was like, maybe since it's always correlated with the Nasdaq, it might want to come down with the Nasdaq. So I was like, you know what, like I'll take it. But now I know there was no imbalances within 5 or the 15 minute, right? So this is a 5 minute, nothing. There were, but they were already mitigated. Once they're mitigated, they don't count anymore. They don't matter to me. So um that's a start, right? Um Scaling down a little further down, 5 minute wise, I could have waited for actual tap within, so a second confluence in a way for this to be tapped into. Right, this sort of made equal highs when I looked at it again. I was like, dang, this didn't really tap into it. It just made equal highs. And I jumped the gun too early, right? So, and another one would have been waiting for a break of structure, right? So one of my confluences got hit, which was equilibrium. This fair value up didn't get hit and didn't completely break structure till over here. Which once it broke structure, I was kind of like, okay, like we're gonna go down, and it did go down for a bit, but yeah. So that's another thing I could have waited for, another confluence because only one of our confluences got hit. And then secondly, I could have actually just waited for a 5 minute retracement, right? If I would have waited for this 5 minute retracement, which was at 1050, super late in the day, but I would have seen like oh crud, like there's really not anything to go based off of, right? I could have saved myself the L. Um, so that was like another thing, and then I think overall I could have just also taken profits earlier, right? So I was aiming pretty low. In terms of profit wise, I was aiming for a 3-to-1, right? And my first TP was at these lows, and then second and last TP was all the way down here. So again, this was at 1.8 when I could have took profits at a 1-to-1, right? I would have had my 1 TP, brought my trade to break even, and would have just got stopped out. I wouldn't have lost any money. I would have just gone for a 1-on-1, perfect execution. But again, my TP didn't get hit because my TP essentially was at these lows. For a like a 1.8, yeah. So, just learning experience. Nothing I can do. One trade, that's it. Win or lose, right? So, yeah. So essentially, just a recap of it all. Like, waited for a second confluence, right? Instead of just the equilibrium being hit, price reaching discount and rejecting. We could have waited for the fair value gap to get tapped into. We could have waited for a break of structure completely. Secondly, we could have waited for a 5-minute tracing, which I will do so from now on because I did jump the gun yesterday, but that's because price looked super great, was moving okay, and yeah, so um, we could have waited for a 5-minute retracement. Yeah. So those were things I could have done better, right? And essentially, like the trade that was like that essentially would have been the best trade to take on today's price action because lately the past like 2 months or so price action has been not the greatest, so we've been trying to get what we can during these markets, but essentially the trade that would have been the best to take this whole day would have been pre-market, and as you know I don't trade pre-market, so for starters we have so if I take this off, right, we have these imbalances right here on the 5-minute, small, but they're still imbalances. Another imbalance right here, right? And we have a tiny like liquidity sweep right here, right? So then therefore you can, and not just that, but you get that up candle with that 5-minute retracement without breaking structure, right? So then at this point, was it 9:05? You can start looking for trades, right? So looking at it, 9:05, it's right here. If I'm looking at it, swept right here. We got this order block, order block right there. Broke structure over here. We have inverse for value gap, right? Break a structure right here. You could have drawn like long John Silver right here. Steps underneath this breaker block, right? That's one entry. You could aim for this right here for 1.6, or even targeted the whole like up here for a 2-to-1, or even this right here for a 3.7-to-1, right? So if you would have missed this, right, because some people don't trade till after 9:30, if you would have missed that entry again, you could have just spotted this, right? So you got the retracement at 9:05, waited for to see what price was doing. We got that order block entry tapped into breaker structure, inverse fair value gap, right? But we also get a tap into this fair value gap, order block, and is this an equilibrium hit? And prices within a discounted range. So again, if you're not used to taking trades within the order block, because once this got hit right here, order block is invalid, right? So because it's already been mitigated, and again, we already made another low, so therefore we have a fair value gap or inverse fair value gap that we're going off of, right? So boom, right there. And then if you really were waiting for a break of structure again, right here, long John Silver right here, stops underneath this candle right here, because why? Because we got bullish order flow, and aiming for these highs, possibly, yeah, just these highs or these highs right here for 1.5 or a 3.38 to 1. So or if you want to put your stops all the way down low and just aim for those highs underneath the inverse value gap to 1.8, right? So two confluences would have been hit, order block over here, fair value gap within a fair inverse fair value gap, another fair value gap right here that held, right? Because wicks do the damage, bodies tell the story. If it's not closing completely under there, we still got some more ways to go. So just this would have been the trade to take. again, I don't trade pre-market, so I wasn't looking for anything to take as soon as market opened. So, but this was the trade to take, in my opinion. If you banged on this, um, good for you. But yeah, just to learn another learning experience. Um, that's the trade I took today. For the week, we're one win, one loss. We still have, excuse me, excuse me. We still have 3 more trading days, and based on news and what I'm looking at, we have existing home sales tomorrow, along with crude oil inventory. Shouldn't be that much crazy volatility. Thursday we do have unemployment claims, which I will be waiting for at 8:30, and then flash manufacturing that comes out at 9:45, which I will be waiting for, and then new home sales, which comes out at 10, which I will be waiting for. And then Friday we just have a consumer sentiment that I'm waiting for. Other than that, though, that should be pretty much it. Then we have Monday, no news. Tuesday, red folders, non-farm, employment claims, and yeah. But looks like we need some type of news just because price has been very kind of stagnant. Um, and the following week, it's we have election days on November 5th, FOMC on Thursday, consumer sentiment on Friday, and then crude oil inventories Wednesday. So interesting coming weeks. So price has been kind of choppy, like I said before, for the past like 2 months or so. Um, and it's probably gonna stay choppy till election day. Hopefully after election price starts giving us better price action. Um Again, just focus on risk management, if you're not over leveraging, over trading, learn from your mistakes so you don't make them again. Um it should be fine. Uh and maybe with some news that we get tomorrow, it might be a better trading day because again, we haven't had really good volatile news lately, so it hasn't really given us good price action. So maybe with tomorrow, with the news that comes out, we get some good price action, um, and some good trades in, right? So with that being said, ladies and gents, hope you guys banged today, cashed out some good trades. If you didn't, don't worry about it. Price wasn't the best. If you stayed out of the market, good choice. Um, don't get impatient. Stay positive. Control your trading. Control your feelings, and control your risk management. Like I cannot your psychology is big, but also your risk management. I cannot stress that enough. With that being said, I'll catch you on the next trade recap, guys. Peace.